My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. It's based in London, part of the Archer Daniels Midland Group. I am a technical analyst, so therefore I am providing an additional parallel service to those who follow the fundamentals in the market. I'm looking at markets from a charting point of view, looking at an analysis of that, and actually providing that analysis free to not only ADM but also external customers of ADM and ADM ISI to add to their decision making. Now this is very welcome in some of the fund industry compared to, say, the traditional industry we're seeing. Well, there's two words really, Brexit and China, and those things have impacted the market in extraordinary ways because we've seen a lack of liquidity in the market outside of those times. We've seen a narrowing of volatility, a narrowing of ranges, and then suddenly it goes very, very quick, and then bang! The market moves in one or other direction because of something like that. Now, the idea of technical analysis is to try and anticipate where those things could happen and to what extent. And the winners and losers, it's very difficult because you've had a situation where some of the currencies have actually helped emerging market currencies, such as the Brazilian real, Indian rupee, for example, but they've not really fully benefited from it. Well, US agricultural exports have been heavily influenced because of what's been happening with China. Now, there's also this transshipment idea where some of the goods from America have been transshipped via, say, Latin America onto China in that way. And that's, you've seen some activity in the currency movements because of that, specifically the Brazilian real. To a certain degree, the Argentine peso, but that's a specific situation on its own. The situation that's really moved those is a situation of this lack of volatility. And suddenly a big movement. Most of them have actually been seen gaining recently, and that's actually gone against them because as an exporting nation, you don't want your country's currency to be necessarily that strong. The Brazilian real, Indian rupee, Indonesian rupiah, all of those have been gaining. Well, it's still going to be Brexit. I can see us probably in sort of 5 years' time still talking about it the way it's going at the moment. But that should come to a little bit of a cusp around about early December with the elections. You have then the China situation, the first phase, the second phase, and there's going to be rhetoric on that. Then you have overall, the one thing I'm concerned about is not so much there is a lack of liquidity and there's a fractured market in foreign exchange. That's a given. But we're seeing not so much the availability of credit, not so much the interest rate, but the availability of credit. And that, I think, is going to be a big issue. Plus, we have the elections in 2020 in the US, and there is a significant possibility, from a technical analysis point of view, of a market crash in 2020 on the stock market, which will then have an impact in other markets. Well, I think if you look at it over the euro specifically, you have a situation where there's a long-term downtrend in the euro. Now, it's been disguised recently because of what's happened with the big movement up in the last few weeks in the euro and in sterling as well. But the thing to watch out for is that there is a big move down, not quite to parity, but moving towards the 104.50, 105 area on the euro. And it's a gradual move down. That weakening of the euro is going to benefit, obviously, producers in the European market space.